Welcome to the Friday edition of the Tech Stocks Daily podcast. Today we're diving into a whirlwind of action and intrigue from the trading floors to global expansion talks. First up, Tesla's electrifying news. Between a major recall and Elon Musk's India venture, it's a roller coaster you won't want to miss. Then Google's caught in a double bind with privacy concerns and a phishing scandal. But there's a silver lining with a massive AI restructure. Netflix shakes the market with a surprising dip and strategic shifts, sparking hot debates on its future. And don't miss our scoop on Wipro's leadership change amidst challenging forecasts. Stay tuned, as today's episode is packed with insights that are bound to keep you at the edge of your seat. In an electrifying twist to the usual buzz around Tesla, the innovative electric vehicle titan commanded headlines for a myriad of reasons today, painting a complex picture of challenges and strategic maneuvers under the aegis of its visionary leader, Elon Musk. Musk's impending visit to India, a major recall affecting the much-anticipated Cybertruck, and a fusillade of layoffs exemplify a day of mixed fortunes for Tesla and its enigmatic CEO. Elon Musk's anticipated visit to India takes center stage amidst this melange of news. With the billionaire set to meet Prime Minister Narendra Modi, the rendezvous hints at a significant expansion for Tesla, earmarking a potential $2 billion to $3 billion investment for a new factory. This strategic move aligns with Modi's vision to position India as a global manufacturing hub, particularly in the EV and high-tech sectors. Tesla's foray into India not only promises to diversify its production footprint, but also taps into a burgeoning market where EV adoption represents a fraction of its automotive sales, providing vast growth opportunities. Moreover, amidst the backdrop of the world's largest democratic election unfolding in India, this venture could symbolize a potent blend of technological prowess and political diplomacy. However, not all news shimmered with optimistic prospects. Tesla encountered turbulence with the announcement of a major recall concerning its futuristic Cybertruck. Amid safety concerns over a faulty accelerator pedal, Tesla is recalling 3,878 of its 2024 model Cybertrucks. This development represents a significant hiccup for Tesla, given the Cybertruck's role as a harbinger of the company's innovative edge and its potential to disrupt the pickup truck market segment. The recall underscores the intricacies and challenges involved in rolling out radically new vehicle designs and the imperative of ensuring safety amidst pioneering automotive technology. Compounding Tesla's challenges are continued layoffs, with the recent cut affecting recruiters, an indication of the company's broader strategy to streamline operations amidst the fluctuating demand for electric vehicles. This decision follows a reported decrease in sales and aligns with Musk's penchant for cost efficiency, albeit at the expense of workforce stability. Such layoffs provoke concerns regarding Tesla's short-term operational forecasts and its adaptability to the ever-volatile EV market dynamics. Furthermore, Tesla's stock faced headwinds as analysts aired skepticism over its valuation and growth trajectory. Amidst recalls, layoffs, and debate over Musk's compensation package, the stock's variegated performance reflects investor apprehension about Tesla's immediate future amidst ambitious expansions and the challenges of innovating at the frontier of automotive technology. Yet, amidst this tumult, investors like Cathie Wood remain bullish, with significant purchases of Tesla stock, signaling a confidence in the company's long-term value proposition. This dichotomy of perspectives epitomizes the broader narrative surrounding Tesla, a company at the nexus of innovation, market disruption, and the vicissitudes of ambition. In essence, today's news encapsulates Tesla's multifaceted journey, marked by ambitious global expansions, groundbreaking products fraught with teething troubles, and a relentless drive towards austerity in a bid to sustain its pioneering pace. As Tesla weaves through these challenges, its trajectory remains a riveting narrative of technological audacity, grappling with the practicalities of scale, safety, and market volatility. All right, folks, today's tech spotlight veers onto none other than Google, the tech behemoth that's been making waves in a sea of headlines for a cocktail of reasons. So buckle up as we dive into why Google found itself under the blazing spotlights of tech news today. To kick things off, the UK's privacy watchdog, the Information Commissioner's Office, turned up the heat on Google over its Privacy Sandbox initiative. The core contention? Well, the ICO isn't convinced that Google's noble quest to replace third-party cookies will indeed protect user privacy as promised. For the uninitiated, Google's Privacy Sandbox aims to create a more private web by phasing out third-party cookies. Yet apparently, it might also pave a stealthy path for user tracking, ringing alarms over user anonymity risks. Google, on its part, is aiming to fully bid adieu to third-party cookies by the latter half of 2024. But now it's also wrestling with competitor concerns flagged by the UK's Competition and Markets Authority, alongside the privacy red flags from the ICO. In a darker twist of the tech narrative, scammers have exploited Google's advertisement platform to promote a phishing site, masquerading as the Wales Market crypto platform. This nifty trick led users to a clone website set to siphon off their crypto riches. What's even more intriguing is the scammer's advertisement managed to sneak its way to the top of Google search results, hooking unsuspecting victims with a counterfeit site. This elaborate crypto heist not only spotlighted the risks hovering over digital wallets, but also threw Google back into the fire over the policing of its advertising platform. Across the Pacific, we find Google entangled in a legal skirmish in Japan, where a consortium of doctors has aimed legal arrows at the tech giant. The bone of contention? Derogatory and misleading reviews on Google Maps that, the doctors argue, are tarnishing their professional reputation. They're seeking damages, but the lawsuit digs deeper, highlighting the broader challenges and responsibilities platforms like Google face with user-generated content. It's a wake-up call on the internet's word-of-mouth power, its impact, and the quandary of digital governance. Switching gears to Google's internal machinery, Sundar Pichai dropped news of a significant restructuring aimed at turbocharging the development of AI products. Striving to weave AI more tightly into Google's fabric, all teams involved in AI, from models to responsible AI practices, are being funneled under the expansive umbrella of Google DeepMind. Meanwhile, the platform and devices team is set for an evolution, merging hardware, software, and AI troops under a single flag to pioneer innovations like never before. This strategy mirrors Google's ambition to lead from the front in the fiercely competitive AI arena, even as it navigates tumultuous waters with recent job cuts stirring uneasy waves within the company. But just when you thought the day's Google saga was drawing to a close, another headline flashed. It's about Google firing a portion of its workforce engaged in protesting against the company's involvement in Project Nimbus, a contentious cloud deal with Israel. This move by Google accentuates the tightrope walk between maintaining corporate discipline and nurturing an open, innovative culture, especially at a time when the company is under magnifying glasses over concerns ranging from AI ethics to privacy, and now, employee activism. In a dramatic twist that has kept the tech and entertainment world abuzz, Netflix has made headlines with two major announcements that have significantly impacted its stock performance and prompted widespread discussion among investors and analysts alike. First up, Netflix's stock took a notable dive, plunging by 8.8% to $556.60, sending ripples through the stock market. This tumble was attributed to the company's projection of lower than expected revenue for the second quarter, coupled with a pivotal shift in its reporting practices. The streaming giant, known for its transparency in sharing quarterly subscriber counts and revenue per member, declared that starting in the first quarter of 2025, these details will no longer be disclosed. This strategic pivot away from subscriber numbers to focus on revenue, operating margin, and engagement as primary metrics marks a profound change in how Netflix measures success. Notably, the company will still announce subscriber numbers when hitting significant milestones, but the consistent quarter-by-quarter detail we've grown accustomed to will vanish. This move to reduce disclosure has sparked a mixed reaction among investors and industry analysts. While some view it as a sensible evolution reflecting the maturing nature of Netflix's business and a shift towards a more diversified revenue model, including advertising, others see it as a red flag. Critics argue that transparency around subscriber numbers offers a clearer picture of the company's health and growth trajectory, especially as Netflix navigates the fiercely competitive streaming landscape. The backdrop to these developments is Netflix's astonishing performance over recent years. Even amid a post-pandemic slowdown where many expected the company to see reduced growth, Netflix has proven resilient. The strategic crackdown on password sharing turned out to be a significant growth lever, resulting in a surge of new subscribers as freeloaders converted into paying members. This revitalization of subscriber growth, alongside ambitious content launches and expansion into ad-supported tiers, emphasizes Netflix's adaptive strategies in sustaining its lead in the streaming wars. Despite these efforts and a substantial year-on-year revenue increase, the decision to cease quarterly subscriber reporting has undoubtedly stirred unease. Analysts and investors, accustomed to these metrics for gauging Netflix's momentum, now face a future where these insights will be scarcer. The move raises questions about the potential for stagnation or decline in subscriber growth and what unknowns lie ahead for Netflix. Adding fuel to the fire, Netflix's stance appears to be part of a broader trend among tech giants, who opt to disclose less as their markets and business models evolve. This strategy, while not unprecedented, poses challenges for investors seeking to navigate the shifting dynamics of the tech and entertainment sectors. Amidst these developments, Netflix's focus on broadening its content offerings and bolstering its ad-supported tier underscores a relentless pursuit of growth and diversification. The company's venture into live programming and strategic moves, such as the introduction of cheaper subscription options, reveal a concerted effort to adapt and thrive in an increasingly fragmented media landscape. As the dust settles on these announcements, the road ahead for Netflix is rife with both challenges and opportunities. The streaming behemoth's ability to navigate the complexities of subscriber dynamics, competitive pressures, and market expectations will be crucial. Whether these recent strategic shifts will bolster Netflix's dominance or invite further scrutiny remains a keen point of watch for observers and stakeholders alike. Today, we're diving deep into the tech headlines, where Wipro, the global IT behemoth, grabbed the spotlight for several significant reasons. It's been a whirlwind of action at Wipro, from executive shakeups to financial forecasts that are causing ripples across the IT industry. Let's unravel this story together, and don't forget to jump into the comment section with your thoughts and perspectives. First off, the leadership baton at Wipro underwent a pivotal change earlier this month, marking another chapter in India Inc.'s relationship with expat CEOs. Thierry Delaporte, the non-Indian at the helm, stepped down as CEO and MD about a year and 3 months short of completing his term. His departure paves the way for Srinivas Pallia, a Wipro veteran of over 3 decades, emphasizing a return to leadership deeply rooted within the firm. This move reignited discussions about the effectiveness and tenure of expat CEOs in major Indian corporations, spotlighting Wipro yet again in the corporate leadership narrative. On the financial front, Wipro has been navigating through choppy waters, with its recent guidance for Q1 FY25 turning heads. The company projected a revenue variation ranging from a decrease of 1.5% to an optimistic increase of 0.5% for the quarter ending June 30th, 2024. This cautious outlook reflects the company's adjustment to the rough macroeconomic conditions its clients are facing. Despite these challenges, Wipro reported a total booking of $3.7 billion and large deal bookings worth $1.2 billion, showcasing a resilient performance in securing new and significant contracts under the new CEO, Srinivas Pallia. Moreover, Wipro's Q4 financial performance stirred the market as it managed to beat revenue expectations amidst anticipations of steady growth driven by technological demand. Although it posted a net income decline, Wipro showed a commendable hold in its booking figures, with a noticeable 9.5% year-on-year increase in large total contract value at $1.2 billion for Q4. This performance underscores Wipro's capability to clinch large deals even when navigating through a sluggish economic phase. But the story doesn't end at financial metrics. Wipro's leadership is gearing up for a transformative era marked by emerging technologies. With the appointment of a new CEO, Wipro is eyeing a future where artificial intelligence plays a central role in business. The leadership is optimistic about leveraging AI to deliver enhanced business value and competitive advantage to their clients, signaling a strategic shift towards innovation and technological leadership. As we unpack these developments at Wipro, from leadership changes to financial maneuvers and strategic pivots, it's clear that the company is at a crossroads, facing both challenges and opportunities. The blend of experienced leadership with a forward-looking approach towards technology positions Wipro in a fascinating spot within the ever-evolving IT landscape. Now we turn the floor over to you, our tech-savvy audience. What are your thoughts on Wipro's current trajectory? Do you see the leadership change and the strategic emphasis on technology such as AI as the right moves for navigating the turbulent waters ahead? And how do you think these decisions impact Wipro's position in the global IT marketplace? Dive into the comments section below and let's get this discussion going. Your insights not only enrich our community's understanding, but also shine a light on the diverse perspectives that make technology such a vibrant field. Diving into today's tech news reveals a tapestry of challenges and strategic plays across the tech landscape, portraying a nuanced picture of market sentiment. Let's break it down company by company. Tesla. The mixed news around Tesla reflects a dynamic yet uncertain sentiment within the electric vehicle sector. On one hand, Elon Musk's planned visit to India for a potential factory investment lights up optimism about Tesla's global expansion and the untapped potential of emerging markets. On the other, the recall of the Cybertruck due to a safety concern and ongoing layoffs highlight operational and demand challenges, stirring unease. These developments, juxtaposed against continued investor confidence from figures like Cathie Wood, suggest a fluctuating sentiment that balances Tesla's innovative drive with market realities of expansion risks and production challenges. Google. Google's day in the news brings to light concerns over privacy, cybersecurity, and internal culture, alongside bold strides in AI. The scrutiny from the UK's Information Commissioner's Office puts a question mark on Google's privacy initiatives, potentially dampening sentiment around its capability to balance innovation with user protection. The phishing scam exploiting Google's ad platform further draws attention to vulnerabilities in digital trust and safety. However, Google's strategic restructuring to focus more intently on AI underlines an aggressive push towards leading technological advancement, a move that could buoy sentiment about its future market position, in spite of the several fronts of contention it faces today. Netflix. The plummeting stock price in response to Netflix's guidance and changes in reporting practices clearly indicates jittery sentiment among investors. As Netflix veers away from detailed subscriber data disclosure, concerns rise about the transparency and future growth of the company. Yet, Netflix's agility in adapting to market conditions, evidenced by its crackdown on password sharing and expansion into advertising, provides a silver lining. The company's reflective shift towards engagement and revenue as core metrics hints at a strategic reorientation which, despite causing some consternation, could underpin a longer-term vision for diversified growth. Wipro's story of leadership transitions and cautious financial outlook speaks to the broader sentiment of caution and resilience in the IT services sector. The leadership change signals a strategic focus on innovation and internal talent, potentially bolstering confidence in Wipro's strategic navigation. However, the anticipated revenue dip reveals the pressures of macroeconomic conditions on tech consulting and outsourcing services, tempering optimism with a dose of realism. Overall market sentiment. Today's swath of tech news paints a picture of cautious optimism tinged with pockets of concern. Innovation, global expansion, and technological leadership emerge as beacons of growth and potential. Yet regulatory scrutiny, operational hurdles, and the challenging macroeconomic landscape cast shadows, moderating the overall sentiment. Investors and market watchers are likely tilting between confidence in these tech giants' long-term strategies and vigilance towards short to medium-term headwinds. This balance of enthusiasm for technological progress and caution due to emerging challenges and strategic shifts underscores today's complex and multifaceted market sentiment. As this week wraps up, let's pivot our gaze towards the horizon and deduce potential market movements for the coming week. Given the swirl of tech-driven dynamism and simmering uncertainties across various sectors, we're teetering on the brink of what could be a defining week in the tech cosmos and beyond. Starting with Tesla, the drama around its recall, the executives' globe-trotting endeavors for expansion, and laying off personnel embody a juxtaposition of growth against operational turbulence. With Elon Musk's slated visit to India, we're eyeing a potential boost in Tesla's global market narrative. Investor sentiment may lean positive, fueling speculative optimism around Tesla's stock, especially in light of its strategic push in India's massive market. However, investor vigilance remains paramount, attuned to the fine print of Tesla's operational health, particularly in resolving the Cybertruck recall and stabilizing workforce dynamics. Google, amidst its joust with privacy watchdogs and phishing scandals, alongside a bold AI thrust via internal reshuffling, renders a mixed bag of potential investor sentiment. The privacy concerns, juxtaposed against Google's aggressive AI restructuring, set the stage for a tightrope walk. Despite potential regulatory headwinds, Google's undaunted advancement in AI and machine learning could propel investor enthusiasm, betting on long-term returns over short-term hurdles. Attention to the unfolding narrative around the ICO's stance and any further escalations in ad-related controversies is crucial, as these elements could sway sentiment. Netflix, caught in the throes of a significant stock dip and strategic shifts away from subscriber count transparency, might be poised for a re-evaluation. The reactive dip implies potential volatility. However, Netflix's enduring efforts to rejuvenate its subscriber base and diversify its revenue streams could stabilize sentiment. The focus will likely shift to how Netflix articulates its next growth chapter, pivoting closely on content strategy and the performance of its ad-supported tier. Investors should brace for short-term flux, but watch for signs of a strategic pivot successfully gaining ground. Wipro, amidst leadership transitions and sobering financial outlooks, embodies the broader IT sector's cautious optimism. The leadership change could spur renewed vigor towards innovation and market adaptation. However, the macroeconomic sensitivity indicated in its forward-looking statements mandates a vigilant watch on market dynamics that could affect its service demand. Wipro's strategic adjustments and deal win momentum could be a bellwether for broader sector sentiment, with potential spillover effects on peer sentiment and sectoral indexes. On a macro scale, factoring in the broader economic indicators such as inflation rates, employment data, and international trade tensions will be critical in sculpting the week's market sentiment. The tech sector, while resilient, is not immune to these broader economic undercurrents, with potential policy adjustments by central banks globally whispering caution into our economic sails. In summary, the week ahead beckons with a tapestry of potential market directions, heavily influenced by the unfolding stories within major tech players and the broader economic landscape. The intertwining themes of innovation, regulatory oversight, and macroeconomic vigilance paint a picture of guarded optimism, with a side note of readiness to navigate through possible turbulences. Investors and market aficionados alike would do well to keep their ears to the ground, eyes on the horizon, and not shy away from recalibrating their sails as the winds of market sentiment shift. Wrapping up today's whirlwind of tech market activity, we witnessed a blend of groundbreaking expansions, challenging hurdles, and strategic pivots from giants like Tesla, Google, Netflix, and Wipro. Tesla's mixed bag showcases its relentless ambition amid operational hiccups. Google's intricate balance of advancing AI and navigating regulatory challenges highlights the complexities of leading in today's tech landscape. Netflix's strategic maneuvers, while stirring debate, point towards a redefined path for subscriber engagement and diversification. Wipro's leadership shift and cautious outlook reflect the larger IT sector's resilience in response to an ever-evolving global market. As these narratives weave through the fabric of the tech industry, we're reminded of the constant dance between innovation, market dynamics, and the strategic chess moves by those who lead them. These stories, reflecting the day's market sentiment, spell out not just the trials and triumphs of individual companies, but also paint a broader picture of the tech ecosystem's adaptability and relentless drive toward the future. Stay tapped into the pulse of the tech world by tuning in again on Monday for more insights and updates. Let's keep the conversation going. Like, subscribe, and share this video to dive deeper into the fascinating world of tech with friends and fellow enthusiasts. Have a fantastic weekend, and see you on Monday for another roundup of tech news that keeps us connected and informed.